Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so you can better understand it tomorrow. And today we have the Euro currency futures. Now, obviously, today is a pretty big day. We have FOMC going on. We had some pretty big 8:30 news. There's a lot of stuff happening today. And that's really where a lot of the interesting movement comes from. We had this big rally up on the 8:30 news, huge spike in, well, I mean, pretty much everything, not just the indicator itself, but massive spike up. And really, whenever you have a big spike off of the news, typically speaking, it's either going to continue with conviction, right? It's going to break out and just keep running and running and running, or it's going to go sideways or even reverse on itself back down again. It depends on the follow through, right? What does the market want to do? Here we can see that we have that huge breakout move to the upside. We get another bull candle follow-up. When the bears try to come in off of the monthly resistance, all they manage to get is a doji and a bull move right back up again. So we know that we are seeing a form of conviction to the upside here on the euro, and that's likely going to lead to this being seen as breakout mode by a lot of traders, and that's going to cause the market to continue to rally up whenever it pulls back. So we get this first attempted pullback, and we a little bit nervous that this may be a twin reversal, but notice how small of a candle this is, right? They break out above the highs. When they pull back, they close on it, and then they start turning back around, and that is a buy signal with the failure of a twin reversal and the conviction of the buyers really showing up to the party and hitting the market higher, allows the market to pop up into the next area of monthly resistance. Now notice here, if we zoom in a little bit, we can see that we didn't actually test that monthly resistance. It missed it by a tick and started pulling back. So because of that miss, the likelihood of that being tested is greatly increased. We came one tick away from it. It's very unlikely that the market isn't going to complete that tick, but we need to wait for a little extra information, right? We have this breakout mode. We may be stopping that breakout mode. We had a bear engulfing candle down, being the first one to the party once again, maybe a little bit touch and go. There will be buyers that buy this, 100% certain there will be. It just could be a little bit early to the party. And we go into another bear engulfing candle, except this time around, this bear engulfing candle, that's the second one by the way, turns right back around again and fails, and that's in the same place that the market broke out of earlier to the tick. And now we have a reason. We have a multiple level of confluence with two bear engulfing candles failing. The first one, and not so much. The second one completely failing. And now we're coming off of a major level of support from earlier where the buyers are likely to defend, and that allows the buyers to jump on in to try to finish that drive off. Now before that happens, the sellers try one more time and they can't even trigger in, and the buyers respond with a huge bull candle back up, another buying opportunity. And once again, it comes one tick away. Sellers still trying to hold that market down. The sellers come in. Their entry point is likely one tick below that bear candle's low. And notice how none of these actually showed them profitability with a candle close. They had wick in their favor, the sellers did, but it never closed in their direction. They closed right on their entry point. It opened in their direction and then immediately reversed the opposite way. That's going to have a lot of sellers nervous, and after a big bull candle like that, likely one more buying opportunity for the breakout of the highs, and that's about all it gave you. So a really interesting scenario that we had today on the euro with that big breakout move on top of FOMC day, which is coming out in a couple hours now. Very interesting to see how the market responds to these types of things. And whenever you have that big breakout move, again, it's not so much the move itself, it's what does the market do with that move? Do they keep it going? Do they stall? Do they reverse? You can get a lot of information from just looking at the follow through and what happens. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit useful and entertaining, and we'll see you next time.